A subscriber asked me to provide a refresher on what is title insurance. So today's video will be a short class on title insurance. Title insurance is basically a contract that insures payment to the insured for losses incurred due to covered title risks, such as unreleased mortgage, tax, and judgment liens, unknown heirs claiming interest in the property, forgeries in the chain of title, etc. The title insurance policy also covers related costs associated with such losses, such as attorney's fees, court costs, and expenses. Title insurance is different than hazard insurance in that title insurance is a risk elimination product as opposed to a risk assumption product, meaning most of the work to insure a buyer on a title policy is done up front. Extensive research is done to eliminate the type of risks I just mentioned, and the effectiveness of title insurance is ranked based on its low claims ratio. Once someone buys a home or other real property, the preference is not to get involved in a title claim, even if it is covered by title insurance, because any suit against title likely keeps the owner from selling the property or borrowing against its equity until the suit is resolved. In Texas, a title policy insures indefeasible title as opposed to marketable title. What that means is a Texas title policy ensures that title cannot be taken away from the owner, subject to the conditions specified in the policy, like the current mortgage lender's rights. But the policy does not ensure that the property is marketable. For instance, a title policy may insure against a claim that could be made by a neighbor with whom a fence, which is off the property line, is shared. But it does not ensure that a subsequent buyer will buy the property when the fence is off property line. Texas does not have a statutory definition of marketability, so we cannot insure what is not defined. There is a product out there that I have discussed in a previous video podcast. It is called Title Lock. It says it insures homeowners from loss of their property due to fraud or forgery. You cannot lose title to your property by someone forging your name on a deed. Now, on title policies, if there is a forgery in the chain of title before the insured acquires the property and gets title insurance, the title policy will protect the insured once that fraud is discovered. If the title insurance company cannot correct the issue by getting proper signatures, the title policy pays the insured the amount of the loss up to the policy limit and all costs associated with any legal battle to determine property ownership. Title lock is more of an identity theft policy which alerts the insured if someone trying to use your name to forge documents. However, a forged document is not effective to remove title from the owner. One last thing to remember about title insurance is that the title insurance is a contract ensuring the condition of the property at the point of time it is issued. It is not a rendition of the history of the ownership of the property. Some people ask for that history, but that's not what a title company provides. Further, a title policy is not an opinion of title, which means a title company can decide whether to assume a risk of a potential title defect. And some title underwriters are more risk adverse than others, so it is helpful to have several underwriters look at a particular issue. I hope this 3-minute lesson in title insurance is enlightening to you. If you would like further discussion about this, please contact me directly at dmoore@allegiancetitle.com. Or if you have other topics for this tip of the week, please email tipoftheweek@allegiancetitle.com. Allegiance Title is your trusted resource for results. Thank you.